All right. Highlight for today. Well, we had a big number. This happens from time to time. Big number. First thing you have to understand is that it's a big number. Second thing is, what time does it come out? So, what time? Third thing is, where's it supposed to come out? Meaning the estimate. Fourth thing is, what's a big miss? Fifth thing is, where does it come out? Sixth thing is, how does the market react? Now, that seems like a lot of things, but it's not. It's not. It's an easy checklist. ISM is probably the second busiest or biggest number of the month. It's a national look at manufacturing. Comes out generally the first business day of the month. But because the first business day of the month was the first day of the year, they kicked it to today. Either way, comes out. Second biggest number of the month with the unemployment numbers being the biggest on the first Friday, which is coincidentally this Friday. So it's a big number. Check. It's comes out 9 Central. Check. 56.6. Check. That's easy. What's a big miss? And I told guys plus or minus 1 is generally a big miss. So 57 half, 55 half, plus or minus 1 on the estimate. The fifth thing was where does it come out? That's easy. We knew it came out and it was a 60.5, I think was the miss. 60 point something. It was a big miss. So it answered this portion. Is that bullish or bearish for stocks? It's bullish, very bullish, and anybody would know that. Now, you can't buy it when it comes out and catch this move, which was right here. Follow my illustration. Was right there, and then a little pullback, and then a re-rally. You can't catch that. It generally goes. I think Dave in the room says must be bullish. Then boom, it comes out. Was real bullish. Then it spiked to this 15 area. 14, 15 area. And prices paid, which was another component of this number, came in kind of bearish, kind of inflationary, which gets us a scratch right. But what we do with numbers is where is the market right before the number prints price wise? It was around 6 even in this S&P. Why is that important? Because we always call that ground zero. Early on in my training 20 plus years ago, if you get a market or you get a number that's a big number, big miss, it's bullish, it should rally. Okay, it did. It should hold where it started, and it did. If it gets below where it started, look out below. This is stuff in real time you begin to understand and see and analyze. So it's not hindsight's 2020. You have a big number, can't just be any number. It's a big number, big miss, and you can't sustain the rally. You can't sustain the strength from a real big number. ISM with a miss like that is the biggest miss in 2.5 years. Above 60, you generally could maintain the trend throughout that day, which would be to the upside. You didn't get it. And it actually got a little move through in here, kicked off by a little head fake that we were able to see where it nosed up to go down. And even though there was qualified places to maybe get long, they quickly got disqualified. And it was a be careful because you couldn't stay afloat. You couldn't stay up. And the market was given the reason. Any good trader, it's like a good detective. When in an interview with a potential suspect, does he do or say something to get you to scratch your head, therefore laying a clue as to whether or not you got the right person? In this case, in trading, you've got the right direction. And with this information that I just laid out, it gives you the objective governing principle of what drives price. When we don't do something, we should because other people's positions are off. They're all long, thinking that we're going to go up forever because of a strong number and because of this rally after the open. And they all paid the price with the sell off down to 88. Good luck. Stay safe. Continue to subscribe and comment.